Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, it seems that this week I have almost nothing but very good news for any people who are holding FANG stocks. They are all looking very promising at the present moment. So let's not waste any time and let's get right into it. The first one is Amazon, and our friend Mike, who bought this thing very smartly, can really now chuckle because Amazon now looks as if it's breaking through its HB3 breakpoint value, which is 16 times book value. And in that case, could be heading for HB4. And has it been that high before? Yes, it has. In fact, it's been to its HB5 in the past. So this company will not be trying to reach any kind of a valuation which is extreme or absurd. So anyway, good news there, looking very promising. Netflix, Netflix, this is really interesting. We've had that nice run in Netflix, and look how fast the last 4 days have been. Kind of like Microsoft. Netflix went right up against its HB4 precisely to $440, and today has set back about $18. So, is this company going to break out or not? Well, that remains an open question. So to try to answer the question, I said, well, who else may be in the same condition as Netflix? And then, of course, I thought of our old friend Walt Disney that I had talked to you before. Well, here was Walt Disney. It failed at the mid-growth price, failed at its growth price. Look, it tried to recover and went right down to its HC price. That's 1.5 times book value. And in the long-term history of Walt Disney, the HC price is actually a very, very nice low price. Well, since that time, the stock has bounced back quite strongly. But look at that. It's been stopped 3 times at its growth price. So if this stock is going to break out, it's going to take a little bit of effort, particularly as we can see the fair market value is actually continuing to sink. I would say, however, though, that if Netflix breaks out, Walt Disney may well break out with it. And so we might sort of have 2 for the price of 1. However, do not buy either stock in advance of that breakout. Very often, sometimes stocks just reach maximums, and that's it. Facebook, my goodness, it's the same story as Netflix, getting right up to its super growth price. Incredible. And then try and look at that 1, 2, 3, 4, 5 days trying to break through. Now, today, Facebook actually is up about $2.50 through the low super growth price. So this could be fairly promising. The only thing that is a concern, of course, about Facebook is that the fair market value has been slipping. And of course, this is a company where I think something like, what's the number I found for that? 87% of its revenues come from advertising. So with advertising being cut back fairly strongly, at least in the first half of the year, we don't know what might happen to those earnings at all. And we don't know whether Facebook is actually going to be able to buck that trend, particularly in the next couple of quarters when the reporting numbers year over year are going to be really awful. NVIDIA, well, here's our friend NVIDIA. You look at it, tried at the HB2, and bang, it finally went out. So it looks as if it's heading to much higher, possibly as high as $348. Now, Apple, we had looked at that before. It had actually, on the day that the market bust, and then reversed. Here was the bottom on Apple, but Apple closed at the top of its range and the next day was right back over its line again. So that does not qualify as a breakdown. The stock tested that breakdown low, and since that time has been doing nothing except moving higher and higher and higher. We hear that they're reopening their stores in China. Well, okay, that's great. But anyway, who cares? So far, the stock is moving and moving nicely. I don't know whether it'll get through the HB2 on the first try or not, assuming, of course, that it gets there. I would be probably, given the fact that it broke down there, I might be probably, given how extended the market is, I might take some profits there, but it looks promising short term. Alphabet. Well, here we had a nice rebound right off the bottom. It did. There was the really weak day there in the market bottom, but really Alphabet has pretty well stuck right at its super growth price. That's 3.5 times book value, and since that time has been rising nicely. It looks now as if it could well get back to its low super growth price, which is 4.5 times book value. In some senses, however, this is going to be a bit of a struggle too, because again, you see the fair market value is falling, and a huge percentage of the earnings from this company, the sales and earnings, come from advertising, and it wouldn't be terribly surprising in the next little while if we had maybe 2 quarters of pretty abysmal earnings. So it's going to be a strong stomach and investors with cast iron stomachs to keep this company going on the upside. Finally, Microsoft, well, that had the big breakdown, and I thought, gee, we're going to get a superb chance to buy it down at its bubble price, because that was the low some while ago, 2 years ago, just a perfect low, but it was not to be. The strong market has pulled this company and pulled this company up back over its HB1, where we got our buy signal in the first place when we were first starting out with our FANG Friday, and now the stock appears to be happily moving up strongly, and I wouldn't be surprised if we got this stock right back to its HB2. Anyway, you add it all together. There are a couple of questions we need to break out for Netflix. We need to have that breakout for Facebook confirmed, but nonetheless, it's looking promising. And of course, both Google and Facebook are going to be facing some very, very stiff headwinds in the immediate future. But when you add up all the FANG Fridays, at least all the FANGs, they all look as if they really want to go higher. And of course, this has more profound implications, doesn't it? Because this group of stocks are 18% of the Standard & Poor's 500. And if 18% want to go higher, then you gotta wonder if it's going to drag the whole Standard & Poor's 500 index with it. So, promising developments, both from a FANG point of view and even from a market point of view. Anyway, that's it for FANG Friday. This has been Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you've got the right tools. And I hope this week you certainly saw those tools in action. Have a good week. See you next Friday.